All right, let's invite the first corporate on trading hour then. We've got the management of Sonata Software joining us. The consolidated revenues have declined by 15.5% on a quarter-on-quarter basis, though margins have improved on a sequential basis to 10.3%, which compares with about 8% on a year ago. What you can see on your screen is the IT services margins, which for Sonata Software have now declined for the fifth consecutive quarter. Sonata Software's revenues come from the IT services business, which is about 30% of their revenues, and the balance 70% comes in from domestic product sales. So that's the breakup of the company's business. We're now joined by the CFO of the company, Jagannathan Chakravarthi, on the show now. Good morning, and thanks so much for joining in. So first, focusing on the IT services business, where the dollar revenue growth is about 1.7, 1.8% on a sequential basis, and margins have fallen. As you know, as my team was showing, margins have fallen for the fifth straight quarter in a row. Could you give us some guidance on revenue? Because there is a lot of uncertainty about the demand environment and the outlook on margins for the IT services business.
Yeah. Let me take the question on the revenue situation in the IT industry at present. Although there is a lot of news, we are also reading the news, but the ground in feedback or ground order demand position or a pipeline position, it doesn't look like that. It looks pretty strong at present. We are not seeing any change in that, any negative outlook in that at present. So we are confident that this year we will, for the next couple of quarters, next 2 quarters, it will be this revenue momentum will continue to be there. Regarding the profitability outlook, you have highlighted that we have dropped the margin. We have mentioned in the beginning of the year there will be an investment phase also, and the supply chain on the people side hasn't stabilized completely. It has improved a lot compared to Q4, Q1 was better, and Q1 to Q2 was definitely better. The attrition is coming down. However, the entire supply chain issues are not, there still exists issues in few parts, particularly on the cost of hiring, definitely continue to exist. So this will have to be smoothed over a period of next couple of quarters. That will happen, and that may help us to some extent on the margin trend. Apart from it, if you see the fluctuation in the currency has impacted the cross currency for us, both in the revenue terms as well as in the hedging trend. With our 6 quarters of hedging strategy, which worked for a very, very long time for us in our favor, this quarter, because of the swing, because of the depreciation of the currency, the hedges have gone negative on that. So we need this kind of a strong fluctuation in the currency has actually impacted to some extent on the profitability side also, apart from the revenue side.
Margin guidance for the full year?
We are not giving a guidance on the profitability front, but we have told in the beginning of the year that 20 to 22% of the EBITDA we will achieve. We are very confident we will meet that the top end of that guidance, whatever we have given to the market in the beginning of the year. In spite of all the cost fluctuations or investments, what we do, we are confident that our margins will be much better in the coming quarters also. Means it will not change anything dramatically here. From our guidance, we will be in the top echelon of the guidance, whatever we have mentioned.
Right. Hi, Mr. Chakravarthi. Good morning, and thanks for joining us. This is Pavitra. So you're saying 20 to 22%. Even if I assume the upper end of that range at 22%, it's still sharply lower than the 26% that you've been doing. So can you tell us why you think that you're going to see such a sharp fall?
I'm not saying it's going to be such a sharp fall in this immediate quarter. What we guided for the whole year was depending on the investments as well as on the salary increases that is due in Q4. But I'm not saying it will be 22%. It will be much better than the 22%. We don't give a forward-looking guideline, but the situation in the first 2 quarters have been better for us. The investments as well as the salary increase may impact Q4. Even considering that, we will be much better than whatever the guidance we have given.
Okay, will it be better than 22? So would it be closer to 26?
I don't want to comment on that because we don't give the guidance for that, but definitely better than what we are situation.
Okay, moving on to the other part of your business, the domestic products. It has seen a sequential fall of around 22%, but if I look at it on a year-over-year basis, there is a rise of around 70% as well. Can you tell us how demand is looking here?
Yeah. We have told multiple times that please don't measure this business with the revenue. This revenue is like a turnover. So you can't measure it exactly on the turnover basis for this business. This has to be measured on absolute amount of gross contribution, what they make and how it is growing quarter on quarter. The absolute contribution of this business have been consistently growing, and this quarter also it has grown compared to what it was in the last quarter. The demand scenario for this business is very, very strong, and we don't have any doubt about it. The cloud transformation in Indian business has been very steadily growing, and we are very, very confident of doing well in this business. The absolute contribution has been consistently growing for many, many quarters now. And this reflects a very, very strong fundamental demand in this business.
So we should be looking at the EBITDA for the domestic products business?
Yeah, EBITDA is also growing up. The absolute amount of EBITDA is also growing up because the gross contribution as a percentage may be lower. So please don't measure this business on the percentage. This is like how much of absolute gross contribution I make from this business, and automatically the EBITDA and PAT is taken care. So since the investments is not very big in this business, the very, very key driver for this is how much of absolute gross contribution we make, and that gross contribution absolute amount, how it is growing over a period of time. We have been consistently saying minimum of 15% growth will be there. We will definitely, last 2 years we have done more than 20%, and we are confident of meeting the top performance to continue in this year.
So what was the gross contribution of domestic products in this quarter? What was the number?
Yeah, it's about 57 crores. Last quarter it was about 55 crores.
57 crore. Okay. And is there a guidance that you can provide us on this?
No, we don't give a guidance again on this because we don't give this for any profit or revenue. For the guidance is not being given. But the broad guidelines, what we have always set is like 15% year-on-year growth on the absolute gross contribution amount, and we have been beating that comfortably for the last couple of years.